Hello, this is Ahura. Today, Thursday, May 9. I'm here to review the UK Central Bank meeting decisions and its effects on the stock markets and forex markets. Let's review first the decisions and what we had in the meeting. As it was expected, and we have been talking about that, BoE left the interest rate unchanged at 5.25%. It was widely expected. We didn't have any sign that to say that the central bank in the UK will cut the rates. But the question was on the number of the policymakers that will vote for cutting the rates and the number of the policymakers that will vote for holding the rates. Investing.com was expecting 9 votes for holding the rates against 0 votes for cutting the rates. I was talking about that in the last days, and as we wrote in our preview, BoE meeting preview, we have been waiting for 7 votes for holding the rates and 2 votes for cutting the rates. It was expected by many investors, and financial market analysts. However, still, this decision is kind of we can say it's a dovish decision, as more people, more policymakers, they are convincing to cut their rates. The main reason for this is UK inflation numbers. UK inflation numbers is lowering a bit much faster than what it was expecting before, as well as faster comparing to the EU and United States. Therefore, the whole expectation of rate cut for the UK Central Bank, which was probably starting from September or October, now it's became earlier. Maybe they can start rate cut from June or July, probably from the July. That means that the central bank in the UK can start its dovish kind of decisions or rate cuts, stuff like that. Probably it can start a little bit earlier than other central banks in advanced economies, which means it can pressure. Let's bring the chart. That's will add the pressures on the UK currency, on pound, probably that will probably hold the pressures on the GBP. So GBP against the USD or against other currencies can be under pressure for a bit for mid or longer time, especially as long as it's trading under 1.25 against US dollar. On the other hand, that means that the UK stock markets can get the benefits, can get the advantage of that, for which means the soft uptrend that we have been that started from December 2023 can continue. Probably this uptrend can continue for in the mid and longer term. If we check the UK economic data, we can say that if you remember, among G10, UK had the worst economy after COVID-19 crisis. Also, the inflation in the UK, it was expected, it raised about 13%. Now the inflation is about 4.5%, unemployment rate about 4.2%. And we can see that GDP also in past 3 months, sorry, I'm a little bit sick. We can see that the GDP also in the past 3 months have been increasing to 0.2% in March, in January, 0.1% in February, and 0.1% expected in March, which is going to be announced tomorrow. So that means that the UK economy is improving a little bit better than other economies, while inflation also is decreasing. Therefore, the central bank to hold this trend can start cutting the rate from probably July. We should remember that in 2024, central bank in United Kingdom already cut 75 basis point or 0.75% from its basic interest rates. So that means that we can have the soft uptrend in the UK stock markets for mid and longer term, and as well as pressure on the UK pound or sterling for mid or longer term. So for now, this overall hold trend cannot be changed. So our expectation will not be changed on the pressure on the UK currency on the sterling, and more advanced in the stock markets. So, however, Mr. Bailey's press conference will start in 2 minutes. As he is not one of that two members which voted for rate cut, we expect that he can have some more hawkish comments, which means in the short term, in next few hours, this uptrend in the stock markets can get some challenges, and GBP can gain a little bit against US dollar, but that will be for very short term, for a few hours, because the whole image is not changing. Anyway, the central bank already voted. So this is what is going to affect the markets, how it should be. And we talked about that. This overall expectations, this is what we had in the UK Central Bank, and overall expectation from the market and market reactions. If you had any question, please write down under this video in Instagram or YouTube. We'll try to get back to you as soon as possible. Have a good day. Bye.